Hello guys, this is fairbinaryoptions.com, and the chart you are looking at is the Euro Japanese yen on the 4-hour chart. As you can see on the top right side here, we are having 132.33 area for the Euro Japanese yen, and the reason why we are looking to trade this currency pair is this possible contracting triangle that we have here, and this one seems to be broken to the upside, so we're looking for more upside to come. You know that when you're trading binary options, you in order for your option to be successful or profitable, you need your option to expire in the money. There is, if you are buying call, you are looking for price at the expiration date to be bigger than the striking price, meaning the price that you bought the option for. And if you are buying puts, you are looking for shorting the asset, in this case the Euro Japanese yen pair, and that means that you are looking at the expiration date price to be lower than the striking price, meaning the price that you bought the option in the first place. Now this on the euro and Japanese yen is looking like a contracting triangle. From my point of view, a contracting triangle, as you very well know, travels between A and C and B to D trend lines. This is our triangle A, B, C, D, E. This is a classical pattern. It is not complicated, and whenever you are trading binary options, or you are trading currency markets, or you are having an asset like a currency pair for trading binary options, keep in mind that contracting triangles are almost let's say the most common patterns out there. Now this would be the lower part of a contracting triangle. I would say the A and C trend line. Remember, the contracting triangle goes between A and C trend line, and if you clone this one and put it to the upside, so you have A, B, C, D, and E. So normally the D wave and the B to D trend line is looking something like that. Now what you can see now on our chart here is the reason why we are looking actually to buy calls. So we are looking to buy calls, and you'll find out immediately the expiration date. So we're looking to buy calls because the contracting triangle here seems to be broken. Look at the price. So trying to the upside failed, failed, finally breaking to the upside, now retesting, and this is why we are interested to buy calls. So we are looking to buy calls. Let me write here. So buying calls, and we are buying calls with attention again, end of week expiration. Let's make this one something like this and black. Why end of week expiration? Because this contracting triangle is not coming out of an hourly chart or 5-minute chart, but this contracting triangle, it is coming out of a 4-hour chart, and on a 4-hour chart things need to develop a bit more. If you take a vertical line and you're looking at the moment of time the contracting triangle started to form, this was on the 22nd of May 2013, and now we are in September. So we are looking at all this consolidation here, and from price to break higher. So we don't want to make a rush judgment, and we don't want to be trapped in a trade that we don't want to be there. So end of week expiration for buying calls. So basically we are looking at the end of the week, but exactly at the end of the week for prices level higher than 132.29. Now in terms of technical analysis here, the recent highs are in the 133.79 area, approximately like that. So these are the recent highs, and any contracting triangle that acts as a continuation pattern like this one may be is having a measure move, and the measure move is being given by taking the length of the biggest wave of the contracting triangle. So this is the biggest wave, Let me change the color for it so that we know what we are talking about here, not to make a confusion. So this is, and if we clone this line and we put it on the moment of break, and this is the moment of break, you have the measure move for the contracting triangle, and as you can see, this one comes quite high, and the distance is quite big there. Now we are not going to wait for the 140 or 138. When you trade binary option, even 1 pip, if the price is at the expiration date is bigger than the striking price, even 1 pip or even half a pip is enough for your option to expire in the money. Anyways, we are looking on the long side. We are buying calls, end of week expiration, and this comes true. If this contracting triangle comes through, then we will try to treat it next week as well. As you can see, this is not going to be a one in a lifetime trade. Now you might wonder here why, looking at the first wave here to end here, because of a lower degree. If you take a look of a lower degree, let me clone this line. Here we have a contracting triangle of a lower degree, and that makes that the first wave of the triangle there, let me change the color, so the first wave of the triangle there actually has been a corrective wave, most likely a double combination or a triple combination. It is looking like a double combination, and because of the fact that the triangle of a lower degree ended here, this is why we are supposed to look for the leg of this triangle to end here, and from here to take the measure move. Now a contracting triangle has no less than 5 legs. Usually they are being labeled A, B, C, D, E, and this is our labeling and how the triangle should look like. So this will be the wave A. Then to the upside here should be the B wave. Then this one should be the C wave. So A, B, C. Then this one should be the D wave here. A, B, C, D, and this normally is the E wave. Either to the downside here, so either to the downside here or here, it doesn't really matter. A, B, C, D, and E. So that makes the case that we are having here a possible A wave of a higher degree, A, B, and this one should be bigger as well. So A, B, C, D, E, and there you go. This is your contracting triangle. In the light of fundamental events that are coming on the market this week, look for extreme volatility level to hit the markets on Wednesday with FOMC statement and Fed press conference, and that would be the main event not only for this week but the remaining part of the week. What to do and what we recommend is that during high volatility events, try to trade 60 seconds options, short-term expiry options based on lower time frames. This is what we wanted to show you for today. Remember, we are here at www.fairbinaryoptions.com. Please subscribe, and we have such a trading recommendation and trading analysis each and every day, including the weekends. So thank you for having me, and until next time, bye-bye.